We will and then we'll get started very promptly. Okay, I've got 12:01 Eastern Time, so I think we'll start. Again, once again, thank you so much for joining us today. The focus of today's conversation is going to be on the historic executive order announced by President Trump on December the 18th to proceed with rescheduling cannabis and what that means and what it may not mean for financial institutions who currently have a cannabis banking program or who are interested in getting into a cannabis banking program, and in particular, what that may mean for financial institutions interested in doing commercial lending with your cannabis-related businesses. And just for reference sake, going forward, I may be using the shorthand version of that, CRBs. That stands for cannabis-related businesses. Cannabis-related businesses tends to be a bit of a mouthful. And we've got Raphael. He's going to be helping us with the slides today. Raphael, why don't you move on to the next slide? Yeah, just a few words about me. I'm a former financial regulator. I was the attorney with the Maine Bureau of Financial Institutions for 6 years. And during my last year there, 2014, the 2014 FinCEN guidance, which I think everyone on this call knows is kind of the Bible for financial institutions banking cannabis. That was issued in February of 2014. And during my time as a financial regulator, we had many of our regulated entities in Maine, both credit unions and banks, interested in, knowing exactly what that FinCEN guidance meant. And we actually hosted several roundtables for our regulated entities to discuss the FinCEN guidance. In September of 2014, I left and became general counsel for a financial institution in southern Maine. And during my time there, I wore many, many hats. Again, I was general counsel, I was chief risk officer, I was also BSA officer. And during my interview, while I was still wearing my regulator's cap, I asked our CEO whether or not they had a cannabis-related banking program, and a very worried look came across his face. And he said, "Well, I think we have a few." And I immediately put him at ease and told him that I fully support financial institutions banking CRBs, but you've got to have a full-fledged program in place with policies and procedures. Anyway, on my way home from that interview, our CEO gave me a call and offered me the job. I think he was somewhat concerned that I might speak to our administrator about that, which I wouldn't have done. But in any event, that financial institution became one of the first in the country to have a CRB banking program. And I take no credit for this. Our program grew exponentially while I was there. We just happened to be the only game in town. We were the heroes. We were the darlings of the cannabis community in Maine because we were willing to go out on a limb and assume the risks associated with cannabis, with banking cannabis-related businesses. 2 years ago, I had been attending the PBC conference in Washington, D.C., which some of you on this call may be familiar with. I crossed paths with one of Cogent's partners, Joshua Radbod, who runs that program, and Cogent was looking for an attorney with some expertise in cannabis banking. Anyway, a lengthy dialogue ensued, and I joined forces with Cogent Law. And during my time at Cogent Law, I do basic 4 or 5 things. I help financial institutions uh, who are not in the CRB space to get into the cannabis banking space. I assist financial institutions who are in the depository space but not in the lending space get into the lending space. I've helped a couple of financial institutions who've gotten a little bit of trouble with their regulators and have needed remediation. I've worked with several financial institutions who have very well developed, mature programs, but they've kind of gotten bogged down with some inefficiencies, and we're looking for guidance uh, in terms of making their programs somewhat more efficient and cost effective, while at the same time staying on the right side of the line with their regulators and examiners. And then I also work as kind of an on the spot point person with BSA officers if they have a specific question about how to report a particular SAR, or they have a disagreement with their auditors or examiners on something, and they want some quick weigh-in from me. I can assist with kind of on-the-spot queries from FIs. Cogent Law Firm has a very unique is a model. Uh, some of our attorneys, like myself, come from were previous regulators. We have several attorneys who worked at very big firm practice, but became somewhat tired with the pressures of big firm practice in terms of billable hours and so forth, and wanted to join a firm that was entirely client centric, to focus on the needs of clients. Our managing partner, he has done away with all the chaff that goes with um, big firm practice, and stuck just with the wheat, and therefore we are able to bill our time at a pretty significant discount from big firm practices. And I will also say that the attorneys at Cogent Law, the attorneys I've worked are top tier attorneys. It's been my privilege to be at Cogent. I'm very delighted to be there. Uh, Cogent also, we've got a great network. We're very good at referring folks to other people. We work in high risk areas. Cannabis banking is one of them. We have a whole team of cannabis attorneys, and we also have a rapidly growing crypto practice. So anyway, that's a word or two about Cogent. Raphael, we can move on to the next slide. So I'm going to go through, I think, again, most people on this call probably know the background regarding the federal treatment of cannabis, so I won't spend a long time on this slide. Anybody on this call who is as old as I am remembers the days back in the early 70s during the Nixon administration, watching those public service announcements on television, just say no. That was Nancy Reagan's mantra back then. That was her. That's what she took up the torch on a very anti drug campaign. And during that time, the Controlled Substances Act was passed, and there was it's recently come to light that there was some debate in the administration at that time as to whether or not cannabis should be listed as a Schedule One drug, treated the same as heroin, ecstasy, and LSD. And even Nixon, was wondering about that. And at the end of the day, he fell on the side of listing it as a Schedule One substance because he felt that by by putting it under another schedule, it would send the wrong message to youth. It was an unfortunate decision, which led to a lot of injustices uh, over the last 50 years, but that's what happened. And what that meant was that cannabis was treated as a substance which had a high potential for dependency, which we know does not, and had no recognized medical benefit, which again we know is not the case. And also because of its listing as a Schedule One drug, there was no research permitted on the drug. So a lot of unfortunate consequences came as a result of that scheduling decision back in the early 1970s. So, Raphael, let's move on to the next one. So let's move up about 40 years ago. Or sorry, let's progress to 2014. This was issued during the Obama administration. Again, many people on this call are familiar, or intimately familiar with this guidance. The provenance of this guidance was a memo drafted by then Attorney General James Cole back in August of 2013, in which the Cole memo priorities were listed. And and some examples of those are, selling to minors, selling or using or having the drug on federal property for federal land, to name a couple of them. But just a few words about the guidance itself, which was issued in February of 2014 by FinCEN. And for anyone who doesn't know, FinCEN is kind of a department within the it's a federal bureau. And it is a guidance. It's not a regulation, and it is basically informed financial institutions uh, on how to, if they had the risk appetite, or the risk tolerance, I should say, for banking cannabis. It kind of gave them guidelines, cautionary but permissive guidelines on how to how to bank their cannabis members or customers. And that included, very enhanced onboarding for these members, uh, uh, continuous enhanced due diligence, account monitoring. It's kind of like a know your customer on steroids requirement. And then also, this it required these rolling SARs for continuous 90-day periods. And depending on, which would include all the activity in those accounts, deposits, withdrawals, and transfers. And if any of those Cole priorities were implicated or were thought to be implicated by your financial institution's BSA team, or if there was any other suspicious activity uh, implicated during that 90-day period, the directive was to file a marijuana priority filing. And then, if your BSA officer felt that the any of the Cole memo implications or any of the other suspicious activity, or unlicensed activity, for instance, was suspected, then and the financial institution determined that this account really does represent just too much risk for us to even have, then a marijuana termination filing should be filed. And then the last point I want to make about it, I think I've briefly referenced it, is that it is guidance, it's not a regulation, and that brings with it some risks. There are no definitions, there's no official staff commentary to kind of clarify what uh, some of the guidance means. And so, what's happened over the years is, what the FinCEN guidance meant back in 2014 and what it means today, are two very different things. The requirements have grown. I think what's happened is the examiners, they go around from one financial institution to another and they see best practices that are occurring, and then those then become regulatory expectations that the next financial institution they examine uh, uh, who has a, CRB program. And the other risk associated with the guidance, I think it's remote in the extreme, is that the guidance could be, rescinded pretty quickly. Um, I don't see that happening. In fact, there's been much criticism already, both in legal circles as well as from policymakers, that FinCEN hasn't updated its guidance already. And I'll talk a little bit about that in one of my slides further on. Raphael, let's move on. So I've always, when I talk about, what the risks are associated with cannabis banking, there are other risks than the three that I posed here, but I do think that these are the three main risks associated with banking cannabis. And if I were a more clever person, what I would have done is I would have had the compliance BSA risk. I would have had that as a much larger circle. And then the reputational and the legal risks, I would have had those as two very much smaller circles in this matrix of risks. But there are, obviously there's some operational challenges associated with cannabis banking. They're very cash intensive. That poses, teller teller risks, cash management risks, theft risks. But these I think are the three main risks. And I want to talk a little bit more about each of these. First of all, let's talk about the big one as far as I'm concerned, the compliance and BSA risk. The biggest risk I think associated with cannabis banking is that it fails. You're in the eyes of your examiners, your financial examiners, you're not meeting the FinCEN guidance. And what can happen during this is they can make some pretty serious findings against you. They can issue a document of resolution, and if even worse, they can issue a memorandum of understanding against the financial institution. Um, and if worse comes to worse, and they feel you're not doing anything at all, they can not at all meeting the requirements of the FinCEN guidance, they can issue a cease and desist against the financial institution. And that did, in fact, happen back in 2022 against a credit union. It was a consent to cease and desist, a public document against the financial institution. That, to my mind, that's the really big risk associated with banking cannabis. What about the reputational risk? Again, if I were more clever, I'd have this as a smaller circle. I was at a conference in Arizona hosted by the Association of Cannabis Banking, and during the end of that conference, uh, we had a plenary session, and there were, well over 100 people there. And I asked the entire room there, has anyone lost a member or a customer because of banking cannabis? And the answer was a resounding silence. Nobody had. So I think the real reputational risk associated with cannabis banking is getting started with a program and not really knowing what you're getting into, and then having to pull out. And the reputational risk is really with the cannabis members who suddenly realize that your financial institution is their last girlfriend or boyfriend. Financial the cannabis related businesses, like any other businesses, they're looking for a stable and trustworthy partner whom they can work with over time. And then there are, again, I'll talk about this third small circle of risk, the legal risk associated with cannabis. And again, this may sound strange coming from an attorney, but I have always viewed the legal risks associated with cannabis banking as pretty small. There are some technical arguments, that on the books, you're aiding and abetting in the commission of a federal crime because cannabis is still federally illegal. And there's potential RICO violations, anti-racketeering violations against a financial institution. Uh, I put this as a very minimal risk. I don't think any prosecutor has an appetite to go after a financial institution for safely vaulting all of this cannabis money, making the streets of your neighborhood safer by allowing your CRB customers and members to bank their money. It is consistent with local and state objectives to create business-friendly environments. So those are just to name two, very strong policy reasons why a prosecutor would never, uh, I think, would have very, very little appetite for going after a financial institution. The other reason is that, financial institutions are very, very highly regulated, and prosecutors know that, and they know that the regulation of these entities really, the way financial institutions should be conducting themselves should be left in the hands of their regulators, not left to the capricious whims of a rogue prosecutor. Okay, Raphael, we can go on to the next one. So let's moving forward now. 2014, 2024, in May of this was when during Biden's final term in office in May of 2024, then President Biden directed federal agencies to commence rulemaking to reschedule cannabis from 1 to 3. And again, by moving cannabis to Schedule 3, it's a very, very significant change. And by way of example, another Schedule 3 drug is a codeine-coated Tylenol. If this were to take place, medical benefits would finally be recognized by the federal government, the medical benefits of cannabis. Research would finally be permitted by federal agencies. Unfortunately, what happened here, there was some procedural wrangling. There were allegations of communications going on between movements and the DEA that were inappropriate at the time. And so anyway, this rulemaking got stalled. And then, of course, we had the November election, and President Trump was elected. And so anyway, that just sat. This has been sitting there and not moving forward. So Raphael, let's move on to the next one. And then December the 18th, people on this call will remember that date very well. This was the day that President Trump issued an executive order to reschedule cannabis. Uh, uh, you know, uh, pretty historic in context. Some things to bear in mind about the executive order. It has not rescheduled cannabis immediately. Basically, this is a directive to Attorney General Bondi and I'm quoting here, to take all necessary steps to resume the rulemaking begun in 2024. And I'm also quoting here, and that this process is to be completed in the most expeditious manner in accordance with federal law. So whatever one's feelings about, President Trump are, uh, I am optimistic that this rulemaking is going to proceed. One gets a lot of I get a lot of eyewash about the rescheduling executive order. I've seen some recent eyewash that suggests that it may get bogged down once again. I, again, as I said, I'm optimistic that the rulemaking is going to proceed. You talk about how, you know, how influence works in Washington, and I, I view President Trump as being an influencer. In other words, he's the one who's going to direct things, whether or not people agree or disagree with him. Those people below him are going to uh, bend to his his ultimate decision on this. And he's been advised and counseled that rescheduling is the way to go. So I am optimistic that rescheduling is going to occur. Now, how that occurs uh, is a bit uncertain. Um, the As he said in the executive order, he wants to resume the rulemaking begun in 2024. The 2024 rulemaking, we already had a notice and comment period. There were something like 43,000 comments submitted, and about 40,000 of those comments were in favor of the rescheduling. 3,000 of them were against the rescheduling. So exactly how the federal agencies are going to pick up where the old rulemaking left off, that's still uh, that's still an uncertainty. I'm still not sure how that's going to happen. But we do know that, President Trump's directive here is to move, and I'm quoting, as expeditiously as possible. So I think this is going to happen sooner rather than later. Okay, let's move on. So what will rescheduling mean for cannabis-related businesses? So there are a couple of scenarios here. First of all, it's important to note that, even after the rulemaking is final, uh, all CRBs, whether they're medical or recreational, are going to be operating in a federally illegal space. Uh, what will then transpire for the medical CRB community is that the Food and Drug Administration, they will have to establish a regulatory framework for medical CRBs, and that will mean regulations on appropriate dosage, testing, packaging, advertising, those sorts of things. So only after that regulatory framework is occurs and medical CRBs become federally regulated under the FDA, will they be operating in a federally legal space? So that's going to take some time. Um, and then what about the recreational? I use the term recreational, by the way. Some people object to that. Adult use is the other term that is used for non-medical CRBs. Those adult use CRBs, they will continue to operate in a federally illegal space even after the FDA framework is established. So that's an important consideration for banks and credit unions. So anyway, I'm going to talk a little bit about, some of the misconceptions that are going to occur as a result of this executive order. But, everyone on this call should be aware that these accounts, both medical and adult use, they're going to remain high risk accounts even after rescheduling occurs. Raphael, let's move on to the next one. Okay, so let's cut to the chase here and talk about implications for financial institutions regarding rescheduling. So this is probably the most important point that I'm going to make right here. That 2014 FinCEN guidance still remains in place. All of those compliance requirements, the onboarding, the due diligence, and the SAR filings will continue to to uh, to remain in place and will continue to be a regulatory expectation for your financial examiners. So I pose a question here. Is a revised FinCEN guidance in the offing with rescheduling? We will see about that. I think that there is going to be even greater pressure now on FinCEN to revise its guidance. One thing I forgot to mention at the outset when I was talking about Deputy Attorney General, Deputy Attorney General James Cole was he was a keynote speaker at a PBC conference, the PBC conference in Washington D.C. several years ago, and he during that conversation, he actually, in front of this entire audience, he lamented the fact that his memo created an unduly burdensome uh, compliance regime for banks and credit unions to bank CRBs. Anyway, and yet we still have no change from FinCEN. So anyway, I pose that as a question mark. There will be something else on this coming up in a slide or two. What about examiner treatment? Is there going to be less rigorous examiner treatment of CRB banking programs? Already we've seen some distinction between how examiners treat CRB programs on the East Coast as opposed to the West Coast. Again, when I was at my financial institution in Maine, I rather vociferously argued with our federal examiners that Maine is not New Mexico or Arizona. We don't have gangs and cartels, and therefore, kind of a one size fits all approach to cannabis banking really is not appropriate for certain states. So anyway, we'll see if the rescheduling means that your financial examiners will start to take a somewhat more elastic approach to the FinCEN guidance. However, we do have to bear in mind, as I just mentioned, that these CRBs, in spite of the rescheduling announcement, will continue to operate in a federally illegal space. Okay, let's move on to the next slide. The other thing I want to point out to you is that, we are currently, with our present administration, in a very deregulatory environment. Um, I don't know if folks know about this Chevron case decided by the Supreme Court. It was back during the mid 1980s. It is the keynote Supreme Court decision on administrative law. And basically the court said at that time that they are going to give enormous deference to uh, administrative agencies and how they interpret their regulations. We're going to take a hands-off approach. Federal agencies, you're the experts. We're going to defer to you on how to interpret regulations. And that decision was recently overturned by in 2024 in the Loper-Bright decision. So I point this out because I think the federal, regulatory agencies, including our financial regulators, are going to be taking a slightly more deferential approach to their treatment of the regulated entities in light of the fact that they no longer have this judicial deference afforded to them, and that the chances of being litigated for their decision making have have grown because of this Loper-Bright decision. Yeah, there's also an act in Congress right now, the Streamline Act, which is being considered by the Senate Banking Committee, and that would increase the CTR reporting thresholds, I think from just over 10,000, over $10,000 in cash to $30,000 in cash. And I bring this up because we've recently submitted a letter to the Senate uh, Banking Committee uh, to request them to direct FinCEN to do away with the marijuana limited SAR filings as part of their efforts to streamline regulation. Whether or not anything comes from that, I don't know. But I am telling you that a letter has now been submitted to the Senate Banking Committee on behalf of the Association of Cannabis Banking to do away with those limited filings, still requiring the enhanced onboarding, monitoring, and so forth of those accounts, recognizing that they will continue to be high risk accounts, but at the same time doing away with the SAR marijuana limited filings. One of the arguments we make is that we're flooding FinCEN and other regulators with junk data. There's just too much uh, uh, information that's frankly not very useful to regulators and enforcement agencies with these limited filings. Anyway, we'll see if anything comes to that. I just point that out that efforts are underway to get the FinCEN guidance uh, uh, amended. Okay, let's move on. So anyway, this is my three circles of risk. If post rescheduling, if we get to Schedule 3 for cannabis, and you'll see that these circles are somewhat smaller. They, again, don't pay any attention to the proportion of these circles uh, relative to, the size of the circles in my previous slide. I do think there is a slight diminution in risk in all three of these circles of risk. All of it, and again, I hasten to say, all of the compliance requirements associated with the FinCEN guides remain in place. But I do think that there is a diminution in risk. But again, I posted as a question mark as to whether or not the examiners will take a slightly more elastic approach on the BSA and compliance requirements. I think the reputational risk is diminished if you're dealing with a substance that's analogous to a codeine-coated Tylenol as opposed to heroin and LSD. And I also think that the legal risks, again, which I thought even pre-rescheduling was fairly minimal. I think that legal risk is diminished even more as a result of the post-rescheduling. Okay, let's move on. So let's talk about expanding services, potentially offering commercial lending services. What does the risk framework look like now? Well, again, we continue to have these three circles of risk: the BSA compliance, legal, and reputational risk. But we also add another risk, and that is as it relates to underwriting and collateral. It's very important to understand that the FinCEN guidance makes no distinction between lending and depository services. Throughout that guidance, it talks only about financial services. And as I said before, there are no definitions, but that very, very likely includes both depository and lending services. And if you're considering getting into the commercial lending sphere, it's important to know for your BSA and compliance teams that the funding and loan payments, they would all be SAR reportable together with the withdrawals, deposits, and transfers with your on your rolling SARs. Okay, let's move on to the next slide. So, what are some of the other commercial lending implications from the as they relate to the BSA and compliance risks? The relationship becomes uh, a little bit more complex. You've got a stickier relationship. That's also an advantage. But from a BSA compliance perspective, it also represents some enhanced risk. What happens, as I pose in the slide, what happens when your BSA officer determines that you've got a commercial loan with this CRB, but the BSA officer just is no longer comfortable with this CRB as a customer or member because it's non-compliant, it's the license has expired or whatever, and they need to terminate the relationship. But at the same time, you've got this commercial loan hanging out there. So that's a really important consideration, and you're going to want to be selective, I think, in terms of if you're interested in getting into the commercial lending space, you're going to want to be selective in terms of who your cannabis borrowers are. The loan purpose, again, you're going to want to do some vetting on the loan and verify at the outset and on a continuing basis the what the loan is for. Why is the CRB taking out this commercial loan? You're also going to want to do background checks and monitor the guarantors on the loans, just as you would for the CRB itself. And as with the depository relationship, there's going to be ongoing monitoring of the loan purpose and the source of the loan payments. And I put at the bottom here, real key, and that is that there will have to be, very open lines of communication between your BSA department and your commercial lending departments. If you do decide to get into the commercial lending space for your CRBs, you're going to want your commercial loan departments are going to want to first of all talk to your BSA officer to find out whether or not the CRB is a suitable candidate. I've always been an advocate of carrots for compliance. Some of you who've been on some of my other webinars may be familiar with that phrase. And what I mean by that is, don't. I think you're well advised to offer a commercial lending to CRBs who already have kind of an established compliance record with your BSA department, that they understand the requirements, they're providing you with information on a timely basis. The information that they provide is consistent, and those are the types of CRBs I think you're going to want to look to for offering commercial lending services. So it's really, really important for your commercial lending department and your BSA department to have very open lines of communication. And I'm going to talk at the end of this presentation, about policies and procedures. That should be reflected in your policies and procedures. Okay, Raphael, let's move on to the next slide. So one of the biggest changes, and this will be an immediate change once rescheduling occurs, is that Section 280E of the federal tax code will no longer apply to cannabis businesses. And there's been a lot of confusion about whether it still applies to adult use versus um, medical. But if you read the wording in Section 280E, it relates to the substance. It doesn't relate to how the substance is used by a business. So most of the attorneys and accountants that I've spoken to tell me that 280E will apply or will no longer apply to both medical and adult use businesses. And what does that mean? I mean, that is a very big deal from a financial perspective because it means that CRBs, they'll no longer have this ball and chain wrapped around their neck that prevents them from deducting business expenses. So they'll finally be able to do that, and that will allow them, that's going to mean they're going to have much better balance sheets, much higher profit margins, and are therefore going to be, again, from an underwriting perspective, they're going to be a much a more attractive commercial borrower than previously, than prior to rescheduling. Okay, let's go on to the next slide. So let's talk about the collateral risks. You know, and again, this is I talk about policies at the end here, but if you do get into the commercial lending sphere, you're going to want to be selective in terms of the collateral you use. You're not, most of the financial institutions that I work are using real estate for commercial real estate for their collateral. You're going to want to stay away from using the product, the plant, or for the collateral. That's going to get a financial institution into a lot of trouble in a default situation. I'm an advocate of, using tangible assets as opposed to intangible assets like a license or something like that. But you're going to want to think long and hard about, the types of collateral that are going to be acceptable for your financial institution from a risk management perspective. You're also going to want to take a conservative approach regarding the valuation of that collateral. Again, I advise my financial institutions that again, from a risk management perspective, it's better to value the collateral from a non-cannabis use perspective as opposed to a specialized cannabis use perspective. And then finally, you're going to want to uh, uh, adopt, I think, fairly conservative loan to value ratios with your CRB commercial loans. Okay, let's move on. Okay, risk and reward. Uh, I've talked a lot about the risks already. Another risk associated with cannabis lending are the legal or contractual risks. I work with several financial institutions, helping them providing them with very specific side agreements uh, that address things like what happens uh, after a commercial loan has been taken out and there's non-compliance with BSA obligations, or there's a change in federal or state treatment of the CRB. Uh, they address, how the collateral can and cannot be used by the CRB, how the loan proceeds are to be used. I strongly, strongly recommend that financial institutions who are interested in getting into the commercial lending space have a CRB specific commercial loan side agreement. And Cogent Law, we can help with that if you're interested in having a call with me after this webinar. And then so those are kind of the contractual risks. I haven't spoken long enough about the rewards. These are pretty obvious, I think, to most of the people on this call. Increased interest income. Um, the there's Every financial institution that I have worked with, they are rightly charging a premium for their commercial loans. You price according to risk and time, and commercial loans in the CRB sphere, they represent more risk and more time. So premium pricing is very justified. Uh, it's also going to help you diversify your commercial loan portfolio. Um, I earlier on I talked about the risks of creating a sticky relationship. That's also a benefit. One of the things I recommend in your loan agreements is that you have a requirement that the CRB they continue to use your financial institution as its primary depository financial institution during the term of the loan. So if you as you're charging if you're charging fees on your depository relationship, uh, that will uh, that will help with not only your interest income but also with your fee income. And again, you're gonna, when I was at my financial institution, I was getting calls once or twice a week from our CRB folks, uh, desperate for financing. They were looking to private lenders who were charging, frankly, extortionate rates, and they wanted a trusted financial partner to offer financing on reasonable terms. So, I think especially now with 280E going away, I think, the prospect for, I think your CRB customers or members, hopefully they're seeing the light at the end of the tunnel now, and and so should you in terms of considering offering commercial lending to your CRB folks. At the end of the day, it's a risk management decision based on the risk appetite of your board and your senior management. Uh, um, okay, let's move on to the next slide. How am I doing for time, Rafael? We're coming close to the end here. Yeah. Okay, so just a few other notes about policy considerations, which I've talked about before. If you don't have a strategic plan, you need one, and if you have one already, that's going to have to be updated to take into consideration a CRB commercial lending program. Your commercial lending policy, your existing commercial lending policy, is going to have to be revised. You can either revise your commercial lending policy or have a specific commercial lending policy, a new one, approved by your board. Again, that's something that I can fast track for FIs looking to get into this space. Your policies and procedures will have to talk about the collateral considerations that I've just talked about. You're also going to want to establish limits, uh, individual limits as well as overall limits. And then also, very importantly, you're going to want to establish a very strict approval process. Who has the authority to approve these CRB commercial loans? Are you gonna want your board to approve that, or is that going to be a senior management decision made in collaboration? Um, and the last point I have here is the importance of board engagement. BSA is a high risk area. BSA, in the CRB sphere is kind of high risk on steroids, and commercial lending, as I've talked about before, does represent even more Yeah, additional risk associated with that. So it's really, really important to have board engagement, and not only to have board engagement, but to be seen by your examiners as having board engagement. So that means that your board minutes are going to have to reflect that board engagement. Okay, let's move on. Okay, and again, I want to be respectful of people's time. Some of the folks on this call may already have gotten inquiries from your CRB customers or members about the rescheduling announcement. That, oh boy, our accounts should now just be treated the same as any other business account. So if you haven't already done that, you might want to consider an explanatory letter or a Q&A, uh, to, say, hey, members, customers, this is great news. However, you know, we still have to comply with our BSA obligations, and that represents additional cost. And oh, and by the way, you're still operating in a federally illegal space that still represents risk for us. But we're monitoring the situation closely. And again, if any folks on this call want some assistance with that communication, be more than happy to help. Uh, so rescheduling considerations. Uh, uh, so anyway, changes. I think there are going to be more financial institutions who are going to enter the cannabis banking space. I think there's because of the fact that there's diminished reputational risk, and again, as I said before, there's this enhanced opportunity for interest income electing to lend. On the depository side, I think there is going to be downward fee pressure uh, uh, on CRB deposit accounts. We are in an age now where there's competition out there for CRB banking. So your CRBs are looking to see what your competitors are charging. But at the end of the day, I do think the most important thing is for your business services and your BSA, in consultation with your BSA folks, to consider enhanced product offerings and services. Smart safes are a good example of that. And I've emphasized this, trust is really the most important thing. They want that trusted partnership. They want to know that you understand their business. So, your folks in your commercial lending department and your BSA department, they should be curious. They should be learning about your CRB's businesses. Okay, let's move on. I think that might be the last one. Yeah. Okay, just a few words about how Cogent Law can assist. I regularly do senior management and board presentations on cannabis banking. Again, I can fast track uh, your financial institution with policies and procedures, either on the depository side or the lending side. Cogent Law can offer an opinion letter on the legal risks associated with cannabis banking. That often is some regulators require that of their financial institutions. As I mentioned before, I can assist with banking remediation, program review if you're looking for efficiencies, cost savings. Cogent has a whole network of third parties who work in the CRB banking sphere. We can help with that. And I've neglected to talk about hemp, but and I could do a whole nother webinar on uh, banking hemp. There's been a lot going on with hemp. I don't have time for that today. But if any folks have questions about banking hemp, please give me a call, because that is an area that's very, very much in a state of flux right now, given the appropriations bill back in November, which basically recriminalized 90% of hemp businesses. But then the executive order on December the 18th, which had language in it indicating that they were going to update the definition of hemp in the appropriations bill, offering a glimmer of hope to the hemp industry and importantly, the financial institutions who are banking hemp. So if you have any questions about hemp, don't hesitate to give me a call. Okay, I see a nice note there from Ryan. Thank you so much, Ryan. Really appreciate that. Again, these are my contact details. That telephone number there is my cell phone number. Give me a call, shoot me an email. I'll be more than happy to be of assistance. I did not leave time for questions. I'm so sorry. Are there? I'm more than happy to stay on and address any questions. Or if you want to take it offline and you have a follow-up question with me following this webinar, again, please don't hesitate to reach out. Uh, I'm not seeing any questions, Raphael. Am I correct about that? Okay, no questions. Okay, I reneged on my promise to allow some time for questions. Please don't hesitate to reach out. Ricky, thank you for your great note. Great to catch up with you again, Ricky. Okay, we'll leave it at that. Thank you again, everyone, for attending. Take care.